So, you're thinking about buying your first home? Exciting, right? But now you're stuck on one big question. Should I go with an FHA loan or a conventional loan? Well, you're in the right place. In this video, we're breaking down the pros, cons, and key differences between these two popular mortgage options. By the end, you'll know exactly which one fits you best. Let's dive in. All right, let's start with FHA loans. FHA stands for Federal Housing Administration, and these loans are designed to help first-time homebuyers who might not have perfect credit or a massive down payment saved up. Here's why first-time buyers love FHA loans. Lower credit score requirements. You can qualify with a credit score as low as 580 with just a 3.5% down payment. Some lenders even allow scores as low as 500. Though you need a 10% down payment. Smaller down payment, only 3.5% down? That means on a $300,000 home, you'd only need $10,500 instead of 20%. More lenient debt-to-income DTI ratios. If you have student loans, car payments, or other debts, FHA loans are more flexible compared to conventional loans. Easier approval, even if you've had financial hiccups like past bankruptcies. You might still qualify sooner with FHA than with conventional, but of course, FHA loans aren't perfect. Let's talk about the downsides. Mortgage insurance premiums, MIM, this is a big one. FHA loans require two types of mortgage insurance, an upfront payment and a monthly fee, which sticks around for the entire life of the loan unless you refinance. Strict property standards, the house must meet certain safety and livability requirements. So if you're eyeing a fixer-upper, FHA might not work. Loan limits, there's a cap on how much you can borrow, and it varies by location. Now that we've covered FHA loans, let's flip the script and talk about conventional loans. Unlike FHA loans, conventional loans aren't backed by the government. Instead, they follow guidelines set by Fannie Mae and Freddie Mac. These loans tend to reward buyers with stronger financial profiles. Here's what that means for you. No mortgage insurance if you put down 20%. That's right. Unlike FHA, you can avoid extra fees if you have a larger down payment. Lower mortgage insurance costs, even if you put down less than 20%. The private mortgage insurance PMI on conventional loans can be removed once you reach 20% equity. Unlike FHA loans, where mortgage insurance premium MIP sticks around. More property flexibility. Conventional loans aren't as strict about property condition. So if you want a fixer-upper, you have more options. Higher loan limits. You can borrow more compared to FHA, making conventional loans a better fit for pricier markets. But here's where conventional loans aren't so friendly for first-time buyers. Stricter credit score requirements. Most lenders require at least a 620 credit score, and to get the best interest rates, you'll need 740 or higher. Higher down payment options. The minimum down payment for first-time buyers can be as low as 3%, but many opt for 5 to 10% to get better terms. Tougher debt-to-income DTI limits. If you have a lot of existing debt, getting approved for a conventional loan can be more challenging. FHA loans require a 580 or higher credit score, sometimes as low as 500, a 3.5% down payment, and lifelong mortgage insurance. They have stricter property standards, making them ideal for buyers with lower credit scores and limited savings. Conventional loans need a 620 or higher credit score, better rates at 740 or higher, a 3 to 20% down payment, and mortgage insurance that can be removed after reaching 20% equity. They offer more flexible property standards and lower long-term costs, making them best for buyers with good credit. Here's the deal. FHA loans are fantastic if you're a first-time buyer with less than perfect credit or limited savings for a down payment. It's a great way to get into a home sooner rather than later. But if you have a solid credit score and at least down, conventional loans can save you money in the long run by avoiding lifelong mortgage insurance and getting better interest rates. Think of it like this. FHA is like training wheels for new buyers, helping you get started. Conventional loans are like upgrading to a smoother ride if you qualify. Still unsure? No worries. Every buyer's situation is unique, and the best way to figure it out is by talking to a lender. They'll help you crunch the numbers and see which loan makes sense for your goals. And hey, if this video helped you, make sure to hit that like button, subscribe, and turn on notifications so you don't miss any of my real estate tips. Thanks for watching, and I'll see you in the next one.